This is Alan Bush with the daily financial forecast for Thursday, April 2nd. Starting out with the stock index futures, we were a little bit lower in the overnight trade. However, futures very quickly advancing. This ironically due to what appears to be on balance weaker economic numbers here in the U.S., although we did have jobless claims coming in better than expected. Construction spending also coming in better. Did have the New York ISM report coming in with a very big miss. So that suggests that the Fed may need to hold off on raising interest rates, even though the consensus view is that the Fed will be raising rates later this year, possibly in the third or fourth quarters. Our feeling is that there is growing evidence that the U.S. economy is beginning to slow a bit, and that the Fed will be forced to wait to raise interest rates, and that is bullish for stock indices. Over in the foreign currencies, we are seeing the dollar index under some pressure, and I think this is largely due to the growing realization that economic growth here in the U.S. May be slowing, and it is, I believe, starting to adversely affect the dollar index under some pressure again today. We also feel that with exchange rates having recently been at extremes, with the dollar recently at a 12-year high and the euro currency recently at a 12-year low, that the economic strength that we were seeing here in the U.S. is now being transferred to some degree over to the Eurozone. So we do feel that the Eurozone economy has turned a corner and that we will see better economic numbers there and at least a sideways to higher euro currency. The only risk we feel in the Eurozone is geopolitical. Seeing some pressure in the Australian dollar on ideas that the Reserve Bank of Australia will cut interest rates at their policy meeting next week. Now, moving over to the interest rate markets, we are seeing a little pressure developing at the long end. I think there's long liquidation ahead of the non-farm payroll report that will be out tomorrow at 7:30. The guess is for a 245,000 increase in non-farm payrolls. Our feeling longer term is that the 10 and 30-year issues will continue to trade to the upside, and I think this will be a trend that will be a long-term move, and I believe it will be very well supported by a Fed that remains very accommodative. So everybody have a good trading day, and once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.